So we're looking at a bit of a mixed picture here this morning. Dow's up 4. Let's get to Bob Pisani. Hey, Bob.
Hello, Carl. Happy Friday, everybody. A modest reversal of the trend this week, but not a lot of conviction behind that. So I think the main trends are still intact. Let's just take a look today, though. Banks have been awful performers as we go into earnings season next week. But for the last 2 weeks, modest upside today. Consumer staples better. Healthcare flattish, but certainly the Gilead news is good news overall for the trends here. Tech modestly lagging, and China, which has been on a tear all week, down today. We'll get to that in just a minute here. But the trend this week is very clear. We keep emphasizing tech wins no matter what. Reopening good news, reopening bad news. Tech generally does well here. So semiconductors, the NASDAQ 100, Microsoft, which is a proxy for mega caps. This is just for the week. And S&P growth overall, which is largely into of course, technology. As far as the laggards here, we've talked about the cyclicals not getting any traction at all, even on up days. Energy, banks, industrials, the small cap Russell 2000. There's S&P value. So growth up 2.5%, value down 2%. It's a very typical trend that's really been going on, frankly, for many years. And in terms of what moves the markets, I added a 6th bucket yesterday. But remember, the news we've been getting this week here, the reopening has been rocky. It's a W, not a V right now. The stimulus, well, it's there, but there may be some less on the way depending on how the congressional negotiations go. Treatments are advancing. That's been a definite positive all throughout this mess. Trade war with China, still another wild card out there. And the election, that's another one that I added as a wild card. And, of course, valuation. If the reopening does poorly, many stocks are overvalued. So there's a lot of things that are on either side, positive, negative here, and you can see the market hesitating. As for China this week, we've been telling you about the wild moves in Chinese stocks, up 10% on the week. Look how contradictory these messages are. On Monday, the China Securities Journal, which is state-owned, called for a healthy bull market. Go out and buy, folks. Yesterday, the China Economic Times, which is a state-owned vehicle, said there was a crazy bull market going on and people should be careful. I don't know this is clearly mixed messages here, and I think they've got to get a little clearer idea about what they want the markets to do, if they want the markets to do anything at all. But obviously, they're being very involved. Look at MCHI. This is the broadest Chinese. This is up 10% in a week. They can jawbone the market. Official government organs jawbone the market. Otherwise, nobody would care about following what they say. But you see what's going on here and the issues there. Finally, how about a slower return for Wall Street? We have been talking for a while about the fact that Wall Street trading desks have been very successful operating at home. The big concern was the Wi-Fis. The Wi-Fis have generally been operating very well. Today, BTIG, one of the well-known boutique trading firms in the U.S., run by Steve Starker and Scott Kovalik, announced that they were not going back through 2020, not Labor Day, through 2020, 100% remote work until they get more clarity on the indoor environment. As to what happens post-virus, post-vaccine, at least half of their staff is expected to combine remote and in-office work on a permanent basis. So this is the first firm I've seen that's announced they're not coming back in 2020. David, I speak a lot with the desk, the trading desk, the buy-side desk and sell-side trading desks. Generally, I've heard things are going very, very well, and there's not a lot of pressure on people to go back at all. Certainly through Labor Day. I'm not sure about past that. I'm wondering, you talk a lot with the M&A desk and one of the deal-making desks. Is there any pressure you're hearing from people to go back sooner rather than later?
Not really, Bob. It's a great question. I'm glad you brought it up. I mean, Goldman Sachs asked sort of their partners to come back in some phases, but I think they've only got 20% in the actual office. Listen, investment bankers do most of their work on the phone or on airplanes. Many of them are happy and, in fact, telling me they're more efficient sitting at home doing Zoom meetings, to the extent that that's become a more acceptable way to do things, because they're not traveling as much. But being in the office for many bankers is not really that much of a necessity, at least not right now. And when I hear what BTIG is planning, and I hear anecdotally other firms as well, I continue to wonder about your major metropolitan areas, particularly, of course, New York City and the financial services and so many others, and what that's going to look like when you simply do not have the same amount of workers, even when things are over and done with, as soon as possible, we hope, coming back to work, Bob. There's just going to be fewer people working in office buildings, it would seem like.
Yeah, and the fear was that the Wi-Fis were going to be the weak link, and back in March, people were terrified that they were going to be overburdened. They were going to break down. The messaging traffic would break down. And to a large extent, that hasn't happened. There's been some wonderful technological developments about compressing the message traffic that's been enabling Wall Street to essentially function very well. And even us, we were given these remarkable devices. We're using them now, David, these Padcasters, which are glorified iPads with very fancy lenses on them, and they've been working very efficiently. And by and large, the broadcasting networks, including us, have done very well with that. So if there's any good side to this mess, this disaster, it's the technology has definitely been pushed and found to be functioning for the most part fairly well.